just so many scams out there. But what's ridiculous to me is that well, you know what? So people will call even if they know that it works, they'll call that a scam. You know what I mean, Bob? And so there's got to be a way we can, I don't know, at least reframe that so that people find it as an opportunity. That's what it is, you know. Cool, cool. Well, right on. I'm gonna go. Okay, I'm streaming on some mini platforms, but now I'm gonna also stream on TikTok if it'll let me. I think yesterday was like saying there were some problems with bandwidth. I wonder if that's because I'm on the wrong network here. Let's see. That could be it. Let's see. Where is the network? There we go. No, it should be on the high-speed network. Although I guess I could try the other one if it doesn't work. Here we go. Should be a way to test your connection beforehand. Today was being such a bitch. Okay. Boom, boom, boom. I believe we're live and good everywhere. Yes, 1.4 megabits per second over there, and a bajillion platforms over here, and Zoom and Discord, and phew. Takes a lot to run this rodeo, you know. Anthony, good morning. And so Bob, Daniel, and Marcus. Okay, welcome in. All right, everybody's going to be coming in little by little here. And across all the platforms, hello, good morning. The market, let's take a look at that. Let's just go right over to the market and see where we are and talk about the market for a moment. Overnight, we had some continuation and then some pullback, and we're exactly where we left off yesterday, this morning. The entry 2 days ago, yesterday, what was it? What's today's Wednesday? On Monday, which was that really strong up day. In the morning, that created a signal, and we got into lots of stuff in the morning. And then I advised some people who want to wait to the end of the day to wait to the end of the day. But either way, that was an entry day. However, every entry day in the last 2 months was followed by a nice, long, multi-week rally run, right? But we don't expect that here necessarily. Okay, this last pullback was kind of toppy, and we expect it to chop for the next until like the end of this month. And so this entry here, yeah, we got in, and again, advice was to get entry. Again, this program's educational purposes only. But that doesn't mean that this is, gonna run from here. When you take an entry like that, you hope, and then we are getting follow through, and you might be in some positions that you can reap some profit on and take partial profits as it approaches resistance up here. But we expect it to pull back again, and it probably will come in the form of hitting a double bottom. So the trades during these consolidations should be done very defensively, expecting consolidation. Taking profits fast and early and quick cannot hurt. You won't miss out on further gains because fast gains are better than more risk. Always. If you have fast gains, that's the game. You win, but you don't win if you don't take them. So staying in for another day for hoping for more fast gains usually is probably more than a 90% chance of decreasing the speed of your gains in the long run. It's much better to take it and run and sit and wait for another pullback entry and do it again than it is to try and hold and get an average return over the next couple of days. It just is safer than turning up the risk dial more. So in this particular case, if we get, let's say CPI comes out tomorrow and it's a favorable reaction, but then the next day PPI comes out and it's not favorable, and so we pull back. That would create probably a breakout to a new all-time high on the market, tomorrow. But you'd already have been in since Monday, right? And then that means we'd take profits on Friday, and that's the perfect, 1 to 5 day swing. So it's exactly what we're looking for. You take 50% off within the first 1 to 5 days during whatever is an unordinary price change day. Any one of those days that has an unordinary move. And then if it hasn't had any unordinary moves and it's made just a bunch of ordinary moves, you exit at the end of day 5. 50% exit and leave a runner on, or all out. Now that's not the same thing with setting up passive options like credit spreads. For those, you put those on for 3 weeks. Those are to gestate for 3 weeks. The expiration is supposed to be 6 weeks, 45 days. What's 6 times 7? 6 times 7, 42. That's what I thought. It's not 45, but close enough. It's about 6 weeks. And then, but for example, TGTX, a stock that's up 11% this morning that we've been in since this little blue candle here, is up 37% in 4 days. And since yesterday, on an options trade, an option spread that I, put on for 3 weeks of gestation, 6 weeks expiration, is already up 70% to my max profit in 3 days. And now on this day 4, it's probably going to hit 90% plus. So it's time for me to just go ahead and take that and close that trade out and run. But that's a great example of how just because you choose to sell options doesn't mean you are not participating in longing the stock for the move. I'm in and I'm up 70%. All right. Hey, good morning, everybody over there on TikTok. Okay. Yes. All right. So TGTX is up big this morning, but and it could go further. And Bob mentioned this morning to me, what's going on with TGTX? And he got an earful, the typical earful that one has to hear when you ask that. And it's basically, I don't give a shit. I don't trade based on what I read in the newspapers. The reason why I got into this 4 days ago, before the news came out today, which is that they're having a great forward outlook. The next quarter, it looks to be very good. No kidding. Wow. You mean it went up 190% in 40 days for no reason before that? I don't wait for the news, folks. This stock was up actually from the low before I got in. Yeah, 180, 190% in just 40 days. And that's enough for me to see when it pulls back to stock it for an entry on a pullback. It's there's 1,100 of these stocks in my scan right now on the market. I can't get enough of them. I can't get in enough of them. I mean to say, and they're abundant. By the time I'm in 55 of these kinds of things right now, 55 positions. And, by the time I read the news on one of them, I should have sold. So, the signatures are all there. The price range on this is, over $10. It's $20. It's now $23. The number of shares, the market cap, the relative volume catalyst that happened, the change in character on that, the change in behavior, the move amount keeps becoming more and more extraordinary every passing day after the catalyst. And there's 1,100 of those. And you just find it, and you get in, and the probabilities are there, you know. And if it goes down, you get out. A lot of people are like, yeah, but it doesn't always work. It doesn't mean anything, because it doesn't always work. All right. Thanks very much, first year trader. I appreciate you chiming in. we're gonna create a new character called First Year Trader, and he talks like this. Yeah, I'm a first year trader, and I know everything. Okay. Right on. Uh, Now is above $700. Wow, that's fantastic. I think I'm in it. I certainly we need to give him a name. No, we're gonna call him First Year Trader. I just love that. First Year Trader. I'm First Year Trader, and I'm getting in here. I'm going long. Do I have now? Let me see. I might have gotten out on profits, so that's great. Yeah. All right, so we know where the market's going, and then let's just reiterate the fact that tomorrow morning. Today's Wednesday, right? Let me double check. Yeah. Tomorrow morning we have CPI data coming out. What does that mean? I guess I've mentioned that CPI a couple times. Some of you might not know that's inflation. So we're going to get the inflation numbers, the official ones, right? You can already estimate it. If you're an analyst and you understand all of the variables, you can plug it in and get a pretty good estimate. And so there's an expectation based on those analyst estimates. But we're going to get the official numbers tomorrow morning, as always. And I don't really know whether it's going to be up or down in the one-time event sense. But, over the course of this year, inflation's going down. Okay. And then the Fed will lower rates in concordance on a lagging basis. That'd be pretty much the appropriate way to do it. On the back end. What they should have done on a leading basis was raise rates before inflation occurred. So that was a huge mistake that they made a couple of years ago. Was they raised rates on a lagging basis instead of a leading basis, and they should have just did their homework and known. I mean, this is a standard economic cycle, recession, economic shock. Stuff. So unfortunately, they made a huge mistake there, and we're not able to basically do anything about inflation. Plus, they caused inflation hugely with all the money printing they did, but you could have tamped that down by leaning into it and leading with raising rates. So anyway, the proper way to lower rates now on the back end of inflation moving down is to do it on a lagging basis. So hopefully they don't lead again, which would be a problem. So we don't want to see rates dropping in March or April. That might be good for the markets, but it might not be good for inflation. Inflation is going to go down on its own now that inflation is going down. Economists have a great expression. The cure for inflation is inflation. Stop buying shit. Slow the fuck down. Save up, motherfuckers. Oh my God. That's the whole purpose the Fed raises rates, by the way, is to basically erase your debt, to get the amount of debt you're in to top out. And so you can't get any more debt, so you stop spending. They're trying to get you to stop. That's basically, what they're trying to do, because people don't naturally self-control their spending. which they should. But I mean, hey, if you can do that, you are the elite. Right on. Let's see. We've got 9 minutes before the market opens, and yes, inflation data comes out tomorrow, and that could move the market. Make sure today, by the end of the day, if you have a portfolio of holdings and you're worried about what the market might do with inflation, then you should put on some QQQ puts that neutralize your positions. Enough puts that neutralize your position. If you don't know how to do that, don't do it. You don't ever do anything that you don't know how to do. But that's just remember to do that. And if you've taken my classes or you've learned that elsewhere, don't forget at the end of the day today to protect your portfolio from a potentially terrible CPI. You never know, but the expectation is that it's going to be like roughly in line. At the top, the chop is minimal, the volatility is low, so the result will probably be negligible and within expectation. And I believe that will cause the market to run freely and release a lot of volatility tomorrow morning. But because I think the market makers have been front running the report since Monday and got in mostly on Monday, I believe they're going to be selling and taking profits on that strength tomorrow if that happens. And that could actually drive the market down, but they're going to make a profit between those points. Now, if the report is bad tomorrow morning, then the market makers will sell off their positions, and that will cause a smear of a down panic move all the way back to where they started, which gets them out probably still at a profit, if not break even. So, market makers win either way. It just takes billions, folks. It just takes billions. You can get there. It's called other people's money. Is what it is. What's up, Alessandro? Hey, Alessandro, how are you, buddy? Is that the Alessandro? All right. What are you guys talking about? Let's see. Are you in his group? Yes. Yes. Okay. You do puts on a covered call ETF, less upside risk. Good. Thought you were done. You like it. Bingo. Tired of guru. Thank you, man. And then Alessandro says he taught me a lot, and I haven't lost money in the past 6 months. And that's what it's about. Number one, you got to stop losing money, and you don't know. That's the first year. Your first year of trading should be mastering losing. That's what I like to say. And a couple of newbies are like, "Oh, I got that down." No, that's not what we mean by that. We mean, you need to start to take care and mitigate downside risk, and that should be your first year of mastery. Second year is, moderating and managing trades that you're in, and then third year is trying to increase performance and increase profit. And that's 3 years, and that's the fastest you can pretty much do this. So, Alessandro got there, and he says that over the last 6 months, he hasn't lost any money, and that's a win in my books. And do you think NVIDIA does another split soon? NVIDIA does another split. Actually, let me take a look at what he just said. How high is it? I think it's only like 500, isn't it? Yeah, they're going to let it flow for a while. Wow, already talks of a split? Nah, not now. I mean, it just broke out to new all-time highs. And it needs to, let's take a look at that on TikTok as well. It needs to run and then consolidate, maybe pull back, test waters, and then consolidate. Then maybe it could split. So we're probably talking at least 8 months to a year. And I'm not going to speculate on if it's going to split or not. It's really not that expensive. If it's too expensive for you, you can get fractional shares. Or you can do credit spreads, verticals, which would cost less, much less. You can trade huge, very expensive stocks using credit spreads or fractional shares. But sometimes fractional shares aren't available on premium stocks, and you can solve that easily with credit spreads. The ETF 1.5 bull, which one, Carl? And Oh, you mean the ETF version, NVDL? Yeah. That's what he's talking about. NVDL, guys, if you don't know, provides 50% more return and loss on your investment on Nvidia. That'd be only for trading. That's not to be used for investing. But yeah, the Granite shares, 1.5x Nvidia, NVDL. See, it says daily ETF. That's, you want to be careful. You want to only day trade that puppy. Not day trade necessarily. Swing trade is fine too, but you don't want to invest using NVDL. Maybe a month or two, but because it has a decay, it has I forget what they call it, decay, but it's like it's an ETF problem, a leverage ETF problem. All right, market is opening in 4 minutes, and the biggest thing that's up pre-market is TGTX. The smallest thing up pre-market we don't give a shit about, and then something in the middle, maybe XERS. Let me go ahead and pull up the market for these guys on TikTok so we can watch that. XERS, yeah, is up. However, I just don't love it. I wouldn't call it a prime opportunity, an A grade opportunity. It's not theta decay, Pablo. No, theta decay is what we want when we sell options. It's called it's related to like contango on futures. I just forget the exact technical name for it at the moment. I can't remember everything at every moment. I'll remember it later. I do know it, and I don't know everything. Erosion is a good way to call, another good way to explain it. But by the way, there is a new ticker called iSpy, which is based on an interesting option strategy, a modern option strategy, and provides, I believe, a high dividend and possibly capital appreciation. We don't know that yet, knock on wood, because it's only about a month old now. It's less than a month old. It's called iSpy, Income S&P 500 strategy ETF, iSpy, and you can use this in even a retirement portfolio as a small allocation because it provides uncorrelated risk, because it uses a strategy. Strategies are called alternatives, and they're excellent ways to create. A lot of people are like reaching for, I need uncorrelated assets, because the more uncorrelated assets you have, the more weatherproof your portfolio. I'm a specialist in designing and constructing all-weather portfolios for retirement accounts. And this one, iSpy, is great. You can put a small allocation into your retirement account and work or not. Nothing's proven yet here because it's only been out for less than a month, but it should provide uncorrelated performance, and that's all you need in order to keep making keep your portfolio from dropping during bear markets, crashes, or the likes. The amazing thing about all-weather portfolios is they achieve the same return as the S&P 500, but they don't have any of the drops. So you just get this nice straight line. You get a much reduced padded loss on the loss side. It's pretty cool. Pretty cool science to that. All right, market's opening in 1 minute. Let's see what we got here. Tomorrow is the big day with inflation. See, I know it. It may take a minute for me to remember it. All right, let's watch the market reaction off the open, and then I'm going to be also paying attention to my positions to see what's up. And I do have some cues. I think I better go look at those. Where are they? There they are. Okay. I put some cues on, to hedge. But it looks like I don't need to, though. The market is exactly where it left off yesterday. I just had too much risk. I had too many positions. I have 55 positions. Fully 100% allocated. Is the leverage plus the daily rebalancing is another covered call income strategy? It's not exactly that, though. J King. It's a new modern one. Read about it. It's very cool. I actually think it's good. I think it could do really well, frankly. But you can't bet your money on something out of the blue, a lot of money on something that's unproven. All right. Let me go ahead and drop my QQQ put since we're at the open. And now I can rely on my positions theta for the rest of what I need from it. All right. Perfect. That cost me $14 to hedge my entire portfolio of 55 positions overnight. $14. Very good. Is worth it. And I'm up $250,000 off the open. All right. We got an alert here on GRTX. Let's go see what that's about, because those alerts I set up, are interesting. Oh, if you guys are interested in joining our trading group or coming and checking it out and just taking a peek at it, you can go over to e3tradinggroup.com, and also I have a link in my bio. So there you go. And GRTX, no, never mind. Oh, I see. Why did I have an alert line like that drawn on it like that? I'm wondering if I wanted to short it. Yesterday I drew that line. All right, well, GRTX is holding up in a high tight flag. It'd be better to look at on a intraday basis. Woo, the market is following through. We're getting that whole front running of the CPI report already on the market. That's excellent news. GRTX. Let's pull the intraday up on that so we can watch that. Okay. Wow, market flying nicely. Off of the open so far. Knock on particle board. No, this is wood. Let me see, who the fuck cares? I mean, this is particle board. Doesn't matter what it is. It just matters the superstition. Right? And by the way, the expectation for this month to be flat and choppy comes from 38 years of election year January moves. So far has been absolutely perfectly on point, which was that the first week will drop. We did. The second, third, and fourth weeks of January will go up and then down, and then up and then down, and then the last week there in January will go down, which will freak everybody out. That'll turn out to be a dip buy opportunity, and then we're going to run from there all through February to the end of February for the first rally of the year. And a part of what makes those patterns repeat is not just that those are election years. That's part of it, but it's also because the CPI data is released at the same points, and so, all the economic data and economic cycle data is released during all the same points over the last 38 years of data collected that I have in my seasonality analyzer. And so, there's a lot of merit to that. The pattern may follow that expectation. Visa is breaking a new all-time high. FYI, Sebastian, Visa is probably, I'm going to check in a second here, but Visa is probably a low ADR stock. So it's somewhat worthless to you unless you're managing other people's money and you need to put them in something safe, kind of thing. Let me check. Vis-a-vis. Yeah, the ADR is 1%. So that's a little low performance-wise for us. We try to focus on things that will move 1% per day. 1% ADR means it moves about 0.33% per day. We look for things that are more like 3.6% ADR. Those are stocks that when they rally will return about 1% per day. It's just a nice goal. Visa and things like that, yes, they're this is probably great, but you won't beat the market in them. And we're trying to beat the market, and but those could be good investments. Yeah, that's true. But to beat the market, we really need 3.6% ADR or more. Otherwise, why even show up every day? Yeah, I mean, you could make big money. As a matter of fact, that's a big problem with big money is, they have to count on big names which don't move as big as smaller names in order to allocate, their um, clients' money. So, you will see, investment in Visa from big money. You will see that, but it doesn't necessarily mean that they're going to beat the market. But their clients are happy just to preserve their wealth. Concentration builds wealth, but diversification preserves wealth. Except for the case of the options portfolio, of selling options. Diversification accelerates wealth. What is ADR? Average daily range. And it's expressed in terms of percentage. ATR is very similar, average true range, but it's when they say true, it's sort of like real range, and it's expressed in terms of dollars. So it's very hard to compare one stock to the next. You could say, oh, Visa has an average true range of 84 cents. Okay. And then, Apple has an average true range of $1.11. Which is better? ADR on Visa is 1.0%. ADR on Apple is 1.32%. They both suck, but Apple's a little bit better than Visa as far as, potential return in the long run, day by day on average. But ADR is expressed in terms of percentage, so you can compare them across assets. Something like TGTX, which has been running 100, that's the stock that we like to trade. TGTX, which has been running 100%. Oh, it looks like I might need to sell TGTX before it's too late. It's falling. But anyway, TGTX has moved 60% in 49 days, and that ADR percent is 6.8%, and it's been moving almost 10% lately. Well, I'll get back to that in a little bit. I need to see that sort of, because I'm selling options on that anyway. Down or up, it's okay for me. Palantir welfare check? What? You mean it's dropping? Yeah, welfare case. Yeah, Palantir is not looking good. I was in a profitable options trade on that recently, but now it's just nothing worth attempting again. However, look at that. It is coming up on its 200 moving average, so it'll be interesting to see if it has a reaction up to 200 moving average. I wouldn't bet on it. I'd need to see it move back towards all-time highs, and then from there probably cup and handle / out a VCP. So, there's many months before Palantir becomes of interest again. Unless it breaks down. If it breaks down below the 200, comes back up, bounces off the bottom of the 200, then I might have an interest in shorting it. Like I did Starbucks like a month ago. Yeah, Starbucks not doing well. Why is Starbucks not doing well, guys? I mean, like I said earlier, I don't give a shit, but I don't know. I'm just curious. Why is Starbucks not doing well? Starbucks should do well. Okay, off of the open, we have some things that are performing strong, such as Chewy, apparently. So let's go take a look at Chewy. Okay, Chewy is not really set up for us, and that move off of the open, yes, strong, is actually on a down open, so no luck there. There's boycotts. Oh, okay. Edu. You know what I was hearing? Oh, yeah, I heard this like libertarians say, sort of like left, right, middle. Libertarians are kind of in the middle. They're kind of middle rightish. But I heard him say that Disney is don't count out Disney or Budweiser or Starbucks or any of these things which are catering to the woke, because the woke are the next generation. Oh, ugh, how sad is that? Oh God, just to think of that. Basically, they're a growing generation. Obviously, they're a growing demographic. Yeah, Carl, they're a growing demographic, and that's going to actually click and work out and be a demographic that spends money in the future. Ugh. Yeah. Obviously, I got nothing against what you choose. I'm into freedom, but the problem with the woke are that they're not into freedom, and they want you to be, you know, if they're not, if you're not the way they are, which is woke, then they won't tolerate you, and obviously that's fascism. If you can't tolerate someone, and if you're trying to suppress your oppression, your opposition, that is the definition of fascism. If you're trying to suppress your opposition, right? So it's like, these guys are nutcases. I got nothing against their freedom to be a nutcase and to be a fascist, but you might want to think about that if you are one. You might want to think, wait a minute, that does make me a fascist, doesn't it? Yeah, maybe I should be more accepting of all opinions. Yeah. Well, anyway, that's what I am. Not a fascist, but someone who believes in freedom of thought, freedom of speech, freedom. You can be whatever you want to be. You can be a communist if you want. That's fine. That's fine. But if you're a communist, you're not of someone who is you're not a tolerant a person. You're an intolerant person, I hope. You're not, but for the most part, and it's pretty much where it goes. Oh man. Well, maybe, but anyway, isn't that crazy? Disney, Budweiser, Starbucks. This is a growing demographic. So they'll have that cushion. They're going to have a cushion and a safety net that's growing. They simply need to weather the next 10, 20 years, and they'll do just fine. But for now, their prices are adjusting as their demographic is shifting, I guess you could say. But don't count them out. Don't count them completely out. Don't think bankruptcy. That's not really, they'll be able to manage their way through that transition towards the shift. And then they're going to come out the other end, a growth metric. Yep, it's true. All right, so Chewy, Duolingo at the top. Let's see. All right, Duolingo not quite set up super well. Let's talk about, for setup-wise, doing good, but how about Sentinel? Yes, I like Sentinel, and I called it out as an entry yesterday. But it has pulled back considerably. You don't want to see that much retrace. You want things to remain in a high type flagging type of position. But do you see that? Do you notice that? See, compare that to something that's been running strong. Oh no, we had a nice move from Snap. Let me see if Snap qualifies. There you go. Perfect example of a high type flag with a pullback entry type reclaim entry setup there. Perfect. And it's that Atlas. Look at that. That's a fucking Atlas hand, right, RJ? Oh my, like it's literally the Atlas pattern. Perfect for you. You don't need that big of a left side move, straight like that. It can have some consolidations in there, but it is what it is. And when you measure it, it was about 100% in, what was the time? I'm measuring it now. 100%, 100.1% in 10.9% in 36 bars or 53 days. That's extraordinary. It didn't matter if that came with some consolidations, etc. It doesn't matter that it ran completely straight. But what does matter is that for the complete move and since last consolidation, it's very tight, the distance between the top and the bottom there. And it created that sort of undercutting, the undercut reclaim is a very bullish. It's like shifting into, a higher gear when it does that, higher than the previous 100%. So Snapchat may soon go on an extreme run. That's what the market signals are telling you here. An undercut reclaim, high tight flag, consolidation after 100% move on a big name. I mean, you just can't ask for more. That's nice. Another one that's kind of like, doing interesting things like that is Beyond. It doesn't look quite the same, but the thing is, it's a bigger name, and it is making moves. Right now, the problem with it is it's pulled back too much over the last like 2 weeks. It needed to hang out up there, so it kind of failed itself. Right, it failed its master, and so now it's more in question. But you simply can't ignore a left side move like that, 75% in 12 bars. So it has a signature that you need to keep on watch for a couple months. Every day, if you can look at it, because things can shape up in an instant. It's kind of strange. I've seen it myself where I'm looking at something, Tesla, for example, and it doesn't look like it's in pole position, anywhere near pole position. And then somehow, and it doesn't need to make a big move, but somehow it makes a particular move that creates a whole new setup. Maybe it's a trend line break, and something else comes to fro because of that little move, and all of a sudden it's sitting at pole position in the matter of a day. I've seen it many times, and it's unbelievable when it happens, because it goes from something that looks like it's nowhere near a stock of interest to suddenly being at pole position and ready to break out and run. Anyway, let's take a look at Tesla, by the way. Speak of the devil. Yeah, right now it doesn't look like anything's going to happen on it anytime soon. That's pretty funny. All right, the market is off and running. Let's take a quick check-in on the market, and then probably we'll dive back into the group to continue watching opportunities all day. Yeah, the market itself is, in a sense, in a 4-day high tight flag right now. Like on an hourly chart, it would show it as being in a high tight flag. But overall on the daily chart, it's simply performing well off of the bottom of a pullback of a 2-month run that it recently was in. And that's fine, and we expect it to chop in this whole range for the next 3 weeks. However, CPI could change that. However, I've mentioned the caveats on that this morning. Rewind the show. Go check it out on YouTube if you need to listen to that again. All right, everybody, have a good morning, and I will check you back in the group. Make sure you click the link in my bio for all kinds of resources, my favorite books, etc. And I'll see everybody soon.